Personal Finance Monday here on Money Talk on Mix 93.8 FM, and this week we focus on hedge funds with Citadel's Nishlen Govender.
If you think of a normal unit trust that your investors are used to having from companies like Coronation and the Allen Greys and the like, a hedge fund is a unit trust that has access to more tools and therefore is able to make better use of the market. If I can use an example, a typical unit trust fund invests in, say, equities, and we call that a long-only fund, essentially investing in cash and equities. A hedge fund has the ability to take on leverage, to have more than 100% of its assets invested, and is also able to go short of certain. A typical unit trust with much more tools at the disposal of a portfolio manager to make decisions on the market.
What determines returns then in a hedge fund? This is a popular question because once one invests, they want to know what they're getting out of it.
Yeah, that is the important question, and it's something that has been misrepresented, and it's been one of the things that is stopping investors from using hedge funds, especially those that could have had them in their portfolios. The mandate of the hedge fund can be far-reaching, and it's up to the investor to decide exactly what he wants in his hedge fund. If he decided that he wants, for example, a market-neutral fund, that's a type of fund that he could invest in, and it's up to him to then find a group of managers who could provide him that. It's very difficult to try and group hedge funds in different strategies, and that's where investors get a little bit confused by it and then choose not to invest in the sector just because of how difficult it is to find the right strategy.
Do you find there's enough education around this, though?
No, not at all. It's funny that you ask. A typical layman or a new investor into the market doesn't have enough education, but even investment professionals tend not to take time out of their days to look at hedge funds, to think of them as an investment strategy, or to include them in their portfolio.
That said, are hedge funds popular in South Africa?
In a short answer, but it's definitely picking up more as we've gone through the years. And before I started, I knew very little about the universe, apart from a few names. And now being part of the universe, we're starting to see the new regulations out for the FSP allowing a different type of hedge fund to come into the market. You're starting to see more and more hedge funds, more learning about it. There's a bit more information on them, and more investors starting to understand the benefits of them. I mean, this interview, for example, is a great opportunity to talk about hedge funds, and going back a few years ago, it would never have been the case.
Another popular question is, how much do you need to invest in a hedge fund?
That's a great question, and the answer has changed slightly over the last year. Typically, because of the way a hedge fund can invest and take any number of tools to access the market, the regulation around it said that it needed to be a qualified investor. That said two things, really. You had to understand the type of investment you had, and you had to have significant capital. That regulation has changed slightly, where the minimums have been reduced substantially by FSB. And FSB has taken on the role to say, look, we will administer and monitor hedge funds to make sure that they are keeping in check with their individual mandates. Having said that, investors can now invest at slightly lower rates and don't necessarily need to be qualified.
My next question would be, are they for everyone? Based on the answer that you just gave, some people are of the view that hedge funds are for only the elite.
Based on my answer just now, it used to be. Having R1 million in investable assets for some of us is quite a lot. And if you think of that as being elitist, then that's exactly where hedge funds sat in the universe. Now with smaller minimums, anywhere from sort of 25,000 Rand and up, it is more accessible to certain investors. An investor, though, has to ask, is it the type of exposure that I want? And in short, I would say yes. Every single investor can have and should have some exposure to hedge funds. It just depends on their time horizon and what they're looking for. Now, let's take two converse ideas. I could have a hedge fund that takes on significant risk and tries to beat the market consistently and has more risk than a typical long-only fund, a normal unit trust fund. That's for one type of investor. You also then have the type of fund that tries to protect an investor, has low exposure to the market, has less volatility and therefore less risk. You can see that the spectrum of that is quite large, and investors can then create portfolios that are a lot more different and that have a lot more different exposure that provides them a better view of the market. Now, if I was an investor and if I wanted to have the type of hedge fund exposure that a typical federal client has, I can then invest in normal unit trust funds, but also combine them with hedge funds then provide a better exposure to the market.
Talk to us then about strategy when investing in hedge funds.
It's very important that you pick the correct manager, and in that sense, it's easier to invest with managers you're aware of. Nowadays, there are a lot more services available for you to find the correct investment manager for you. And it does take a little bit of due diligence from the investor to understand the type of manager that he's investing in. Once you've chosen the type of manager, it's important to look at that manager's track record and what fund he actually has. Because we've now moved away from the typical long-only unit trust fund, there's a lot of different options, and an investor therefore needs to understand exactly what he's getting in the hedge fund of his choice.
Let's discuss risk then.
That's another key point. Because there's so many tools that a hedge fund manages exposure, you can then create portfolios that sit on a risk spectrum that's far-reaching. So you then have the normal unit trust fund, and then you could have a fund with almost zero market exposure, and conversely, a fund that has much more market exposure and therefore much more risk, depending on the hedge fund manager's choice. And investors should look at his point in his investment cycle. If he's investing short-term money for a short-term period, he may not want as much volatility or risk, and in that sense, he could look for a fund manager who takes on less risk, who's less exposed to the market, and therefore suits his needs better. If we're looking for a long-term investor, say a young entry into the market who has the next 40 years of his investment horizon, he could invest in a fund that takes on more exposure than a typical long-only fund. So have more than 100% exposure to the market, since he's willing to have the risk ebb and flows through time. So we're now providing you with a bigger menu because hedge funds provide a bigger asset class. You must decide as an investor where you sit in the risk spectrum.
Now that you've spoken about fund managers, how does one look for a fund manager that meets their objectives?
In the past, that's been one of the biggest challenges. Citadel's been building hedge fund-of-fund portfolios for the better part of the last 2 decades. And a hedge fund-of-fund portfolio basically means that we go out there, look for the best fund managers, and then create a fund that investors can then invest in. We do the homework, we do the due diligences, and the investor doesn't have to scour South Africa to try and find the right funds. For an individual sitting at home, it's sometimes difficult to try and find that information. And if that is the case, you could look for a fund of fund. There are more of them available now than previously. Or a simple search of the internet and certain service providers could help that investor to find a list of hedge funds. But it isn't as easy as finding the hoard of funds that you find in the long-only space, like your Allen Grays and your Coronations.
That was Citadel's Nishlen Govender in this week's Personal Finance Monday topic, talking about hedge funds.